Look at your Social Security check for a second and ask yourself this one honest question. Why does it feel smaller every single year, even when you hear about increases and adjustments on the news? Stay with me because in the next few minutes, I'm going to reveal a quiet rule most people in the United States never notice until it's already costing them real money. And once you see how it works, you'll understand why so many SSI and SSDI recipients feel like something is being taken away without warning. Don't click away because what I'm about to explain affects current payments, future increases, and even how much ends up in your bank account each month. And missing this could mean missing money you depend on. And before we go any further, if you rely on SSI or SSDI, or you're helping a family member who does, make sure you're subscribed right now. This channel is built specifically for people in the United States who depend on Social Security, SSI, and SSDI, and here we share payment updates, breaking changes, and real talk about the pension and benefits crises that directly affect your life. Not confusing jargon and not news meant for someone else. If you want to stay informed, protected, and one step ahead when rules quietly change, this channel is for you. So hit subscribe and stay with us. Imagine opening your bank account on Social Security payment day, already knowing exactly how much should be there, and then feeling that quiet sting when the number looks smaller than expected. No warning letter, no clear explanation, no headline on the evening news, just less money. Many retirees blame inflation, rising Medicare costs, or bad luck. But what if I told you there is a quiet, legal, and very real government tax that has been steadily lowering Social Security checks for millions of people, often without them fully realizing it? This isn't a rumor, and it's not a future proposal. It's happening right now, and once you understand how it works, you may suddenly recognize why your check doesn't stretch as far as it used to. When Social Security was created, it was sold as a benefit you paid into and then received back in retirement, almost like forced savings. For decades, most retirees didn't pay federal income tax on their Social Security at all. The benefit was meant to provide basic security, not become another source of taxable income. But quietly, over time, the rules changed. Today, depending on your total income, up to 85% of your Social Security benefit can be subject to federal income tax. That alone surprises many people, but what's even more shocking is how low the income thresholds are and how they have barely moved in decades. The key term the government uses is combined income. This isn't just your Social Security. It includes your adjusted gross income, any tax-exempt interest you earn, and half of your Social Security benefits. If that combined income goes above certain limits, the tax kicks in. For an individual, the first threshold starts at just $25,000 a year. For married couples filing jointly, it starts at $32,000. These numbers sound almost unbelievable when you consider today's cost of living, but they were set back in the 1980s and were never indexed to inflation. That's where the secret part comes in. As wages, pensions, and even Social Security benefits rise over time, more and more retirees are pushed over these frozen thresholds, even if their real buying power hasn't improved. Think about it this way. You might get a small cost of living adjustment to help keep up with rising prices, but that same increase can push your combined income just high enough to trigger or increase the tax on your Social Security. In other words, the government gives with one hand and quietly takes back with the other. Many retirees only discover this when they file their tax return and see that they owe more than expected, or when their refund is much smaller than last year. What makes this feel even more unfair is that Social Security benefits are funded by payroll taxes you paid throughout your working life. You already paid tax on the money that went into the system. Now, in retirement, you can be taxed again on the benefits that come out. This double taxation doesn't hit everyone equally. Those with very low income are usually protected, and those with very high income often have accountants and strategies to soften the blow. It's the middle-income retiree, the person who did everything right, saved a little, maybe has a modest pension or IRA, who often feels it the most. And federal income tax isn't the only way this secret tax shows up. In some states, Social Security benefits are also taxed at the state level. While many states exempt Social Security, several still tax it in various ways, adding another layer of complexity and another reduction in your monthly income. Retirees often move or consider moving partly because of this, not realizing until later how much of a difference state tax policy can make. Another piece of the puzzle that quietly reduces Social Security checks is Medicare. While not technically a tax, Medicare Part B and Part D premiums are automatically deducted from your Social Security payment. For most people, this happens before the money ever reaches their bank account, making the check look smaller from the start. For higher income retirees, there's an additional charge known as IRMAA, Income-Related Monthly Adjustment Amount. If your income crosses certain levels, even by a small amount, your Medicare premiums can jump significantly, taking an even bigger bite out of your Social Security. Again, the thresholds are not adjusted as generously as many expect, so more people get caught over time. What really frustrates many retirees is how little attention this issue gets. There is no annual letter from the government clearly saying, this year, a larger portion of your Social Security will be taxed because inflation pushed you over an outdated threshold. Instead, it's buried in tax forms, IRS worksheets, and fine print. People often assume their benefits are lower simply because prices are higher, without realizing that taxes are quietly doing part of the damage. Over the years, there have been proposals to fix this. Some lawmakers have suggested raising the income thresholds or indexing them to inflation so that retirees aren't slowly taxed more just for keeping up with the cost of living. Others have proposed eliminating the tax on Social Security benefits altogether. So far, none of these ideas have become law. The result is a system where each year more retirees pay tax on their benefits, and many pay tax on a larger portion than before, even though nothing about their lifestyle has really improved. The emotional impact of this shouldn't be underestimated. Social Security is more than just money. It represents security, dignity, and the promise that after decades of work, there would be a stable foundation in retirement. When that foundation feels like it's shrinking, trust in the system erodes. Retirees start to feel like the rules keep changing after the game has already been played. Understanding this secret tax is the first step toward protecting yourself. Knowing how combined income works can help you plan withdrawals from retirement accounts more carefully, potentially spreading income across years to stay below certain thresholds when possible. Some retirees work with tax professionals to manage when and how they take money from IRAs or pensions. Others look closely at where their interest income comes from. While not everyone can avoid the tax, awareness at least removes the shock and allows for smarter decisions. The bigger question, though, is whether this system is fair. When thresholds set decades ago quietly reduce benefits for today's retirees, it doesn't feel like an honest policy debate. It feels like a slow, silent cut. Many people believe that if Social Security benefits are going to be taxed, the rules should be transparent, modern, and clearly explained. Until that happens, millions of retirees will continue to see their checks shrink without fully understanding why. If you're receiving Social Security or getting close to it, this is why paying attention matters now more than ever. These rules affect your monthly income, your tax bill, and your peace of mind. And this is exactly why this channel exists. We break down changes, hidden rules, and quiet policies that affect Social Security, retirement income, and everyday life for people who depend on these benefits. If you want clear explanations, real-world impact, and updates that actually matter to you, not Wall Street or politicians, make sure you stay connected here. This space is for people who worked hard, paid in, and deserve to know the full truth about what's happening to their money.